Hello to all traders and everyone that wants to get more involved in stock trading. My name is David and I will be, as you can see on the screen, welcome to my free live webinar, the benefits of trading stock CFDs. So today, after going through a few margin calculations in trading and beginner's guide for trading, we're just moving on to stocks now because Orbex offers such a variety of stocks in Europe, the UK, and in America that we want to just see what the benefits are and what the opportunities are for trading stock CFDs. So without further ado, let's just take a look at what's on the agenda. So what is stock trading? What is CFD trading? And the benefits of trading with CFD stocks in particular. So a lot of traders back in the day before CFDs became available to trade with, you would go onto an exchange and you would actually buy and sell shares that way. And obviously buying the share would mean the share would need to go up for you to make profits and you would sell at a certain time. So going on to the next slide, the basics of the stock market. So I just want to take you through a few things before we get into calculations, leverages, margin requirements, these kind of things, and what to look out for in stocks. Just to go through the basics of the stock market. So what is stock trading in general? Well, the basis of trading stocks on an exchange is buying when the stock is at a low price and selling at a price suitable to make a profit. However, on stock CFDs trading, it's a little bit like Forex trading in general, where this basis means whether the stock is bought or sold, a profit can be made either way. CFDs are treated the same across the board. So if we look on an example on my MT4 client terminal, I've got two trades open at the moment, one with British Petroleum BP, that's a UK share, and one with Apple. So as you can see, I've got two buy positions in. And if you look at the open price, 171.46, for example, you can see that the price has gone down to 166. So a lot of you know that trading CFDs that you can profit on both directions. So at the moment, if I put a sell position in here, I would actually be in a profit. And same with British Petroleum as well. 394.68 it was opened and 386.94 it is currently at. The market is closed at the moment for the UK shares. That's why it's on a hold. And Apple at the moment is taking a slight break. So as I said, with that being said, it basically means that if this was a two sell positions, I would be in a nice profit at the moment. So, this is the basis of what stock CFD trading is against what stock trading in general is. As I said before, you'd go on to an exchange back in the day, and you can even do it now, and you would get that stock. You can buy stocks on that way. So if we go to the next slide, stock trading is related to buying and selling of stocks, shares of ownership in a public company. So with CFDs, we're not actually owning any shares of any physical shares of the company. We're just owning a contract for difference, CFD. So that contract for difference just basically means whether it goes up or down, if you're in a buy or sell position, will be the reason that you would be in a profit or a loss. Public companies are firms that wish to share ownership with individuals and institutions, and they raise capital by going publicly listed, IPOs. So basically, the initial public offering is when a company is just starting out, and as we see on the fourth bullet point, stock traders who believe the company will grow at pre-IPO time will buy shares at its lowest level. So when a company is starting out, a host of companies have always started out, we've got to go from somewhere, Amazon, Tesla, etc. When these companies were starting out in the beginning, they were probably at a very, very low price when their initial public offering was being determined. And for that reason, we are looking that IPO is possibly a very, very important definition, as it's before the public goes, so the company goes public, it's before many people start buying the shares, and obviously before it can possibly make a lot more money. It's in its infancy, and this is the best time to buy these shares. So it's typically underwritten by one or more investment banks as well, who also arrange for the shares to be listed on one or more stock exchanges as well. And obviously investors negotiate an exchange price which they wish to buy and sell, which makes it a little bit easier for investors, a little bit more friendly in that regard. So without further ado, let's get on with the rest of the slides. So what is stock CFD trading? So we're speculating on the price of a share without taking ownership of a company. So like I said in a couple of minutes ago, we don't actually own any physical shares of the company. So when you're buying 100 contracts of Tesla or Facebook or Netflix, you're just buying a contract for difference until you close the position. So you're not exactly selling it, you're closing it. So if you're in a buy or sell direction, that's what we mean by closing the trade. So bought and sold on a dealing platform provided by the broker, which is Orbex, can make profits if the price of the stock goes higher or lower, and traded on leverage. Let's go back to our trusty MT4 screen. So let's bring in Apple, because I've got the trade open. And what I want to show you is at the time when I actually put a buy position in, it was on the 17th at 5:15. This is GMT plus 2 at the moment. So we're going over here. We can actually break it down. We'll just go here. So 17th, roughly about this time. So I bought at a very, very bad time, because as you can see here, as soon as I bought it, the price of Apple has gone down quite significantly. So we've gone down roughly about $5. Now we'll get into the specifics of shares shortly, but basically American shares are trading in dollars, European shares in euros, and obviously UK shares are trading in British pounds. So at the time, if I put a sell position in here, I would be in a nice profit. And obviously the bigger the size of the contract, the more money that I would be getting as well. So let's just go back to the PowerPoint quickly, and it's traded on leverage as well as shares. So for example, we can go, when you're worried about what leverage or what margin requirements that are going to be needed for shares, we can go into that right now. So the margin, some of you might know, some of you might not. So the margin is a requirement of the amount of funds a trader is required to have in their account to control a certain order size. The required amount for one lot or one contract depends on the value of the asset or the share in question, and based on a percentage of the value of the entire order. So I've just given a quick calculation here. We're going to go more in depth shortly, but margins are calculated with the notional value. So the price of the contract times the contract size and divided by the leverage per one lot or one share. So example, we've got Apple shares now traded at $120 times one lot and divided by 5, and this 5 is equals to 20%. Now what I want to show you here is we've got all the shares here on the left hand side. We'll stick to Apple because it's quite popular. So we go right click, go to specification, and here you can see the margin percentage for Apple. This is per one contract. So at the moment, I've got one contract open. So let's get our trusty calculator out, as it served us so well in the past. So I'm going to do 171.46, which is the price. And then we're going to multiply that by 15%, so 0.15 in there, and then times 1, because it's one contract, which won't make a difference. So $25.71 is what's happening, what the margin requirement is. And obviously I've got the BP trade open, which will make up for the rest of the trade as well. So let's just go into a little bit more detail for some of the trades, because they work a little bit differently. So UK shares, they're quoted in pounds and pence. So this is where it can get a little bit tricky for UK shares if you are dealing with them. So UK shares, BP is quoted at 398.43. I'll just show you that again on my MT4. So 394.68 is roughly about the same price. So I just want to give you a quick example. So that would equate to £3.98 notional value. So this is how UK shares differ from European and American. The margin requirement, therefore, will be £3.9843. You can scrap the last 2 digits, because obviously when we're talking about decimalization, it's £3, it's 3 point and then 2 digits after. So 3.98 times 10, which is the volume that I wanted to take out, and then times 10, which is the margin requirement percentage. So just go back to BP. Let's just flag that up so we can see the specifications. So here, 10% margin requirement. So 10% as a leverage is 1 to 10. and we're looking at 10% for the calculation. So with that being said, the only other thing we have to do, very, very important, is because we are trading with a dollar basic currency account, we have to calculate what the pound dollar rate is, and that will give us our margin requirement. And it will be the same with the profit and loss as well. So P&L calculation is the open plus or minus the close price times the volume, and then that equals the P&L in pounds. The final step is to convert this figure into dollars. So let's do that now. So 3.87 times 10 times 10%, and then divided by 1.35, which is the pound dollar rate. So let's just check that on our MT4 to give full transparency in what we're doing. So currently we've got £3.9468. And I've just done it in typo. So £3.9468 minus £3.8694. Now, because we're in a loss, this should be minus. I should have done that minus that, but it's fine. So now we've got 7 cents. And what we're going to do now, we can just basically times this by 10, which is the lot amount, 77, and then we need to convert that into the pound dollar rate as well, from the pound dollar rate, sorry. So we multiply that by approximately 135, which is the, let's just see, pound dollar, 136 now we're up to. So let's just divide that by 135 to get back to where it was, and then times 136 approximately. And as you can see, roughly 1.05, 1.06, we've been rounded up because I didn't take the rest of the pip amount in. But that's how we calculate for pound shares, for UK shares. So if you take a look at our example on another one, so another UK share, AstraZeneca. So we're quoted at 8852.92. This is the share price, but broken down, it's £88.52. Again, we're going to just ignore the last 2 digits there. So margin requirement, £88.52 times 20 lots, let's say. We're just going to go with a different lot amount, volume amount, just to make it more interesting, and then multiply by 20%. And why are we multiplying by 20%? Well, AstraZeneca, let's see what the margin requirement is, and it's 20% for the margin percentage. So just be careful, for every share, there is a different margin percentage. I picked these ones out to give you a better understanding and better examples. So once we've got that figure, then we times it by 135 approximately. Now it's 136, the pound dollar rate, and that will equal the margin. Conversely, P&L calculation. So we've got £88.52. That's the open and close, sorry. So we times the open and close price by 20, and then times that by the pound dollar rate as well. I wish I could open some more trades on the UK stock exchange, but unfortunately the market is closed. But as I said, any UK shares, which I'll just show you where they are located as well on our website. So if you go to Orbex trading, go to stocks, scroll down, and then you have the 3 subjects here, UK, EU, and US. So with that being said, AstraZeneca, 20%, and for 1 share. So basically, we're looking at 20% of the notional value, and then we're timesing it by the pound dollar rate, because that's what our that's what my base currency is in dollars. So that's very, very important to understand. And let's just take a look at account history, because I did actually open an AstraZeneca trade. So if we look at this now from previous times. So as you can see here, 8852.92. So this equates to £88.52. We'll minus the 80, that's the close price, so 88.28, which will give us 0.24. As I said before, I'm buying, so I'm in a loss already, because I know that this price is lower than this price, but we'll just pretend that there's a minus on here. And then we're multiplying it by 20 volume, and then times 0.20 for the margin requirement. So 0.96. So let me just do that again, because I think we have done something slightly wrong. So 88.92 minus 88.28 multiplied by 20 lots, and then multiply by the margin. So I think, yes. So I confused myself there. I'm thinking of margin requirement, which should just be P&L. So 88.52, bear with me, sorry, 88.28, and then times 20 lots. And now we're going to times by 1.36, which is the pound dollar rate. And then times that by the 20%. So, you know, you're looking at a rough estimate there of what the price was in the past. And with that being said, just got another one for Royal Mail here. So again, 432 times, yeah, so 432.47, and this would be £4.32. So again, the margin requirement, I've done a different lot size. And again, I've picked out this because the margin requirement is 25%. So this would be the margin for Royal Mail. So again, let's just check a look on that. Specifications and 25%. And as I said, all this can be found on our website for all of the margin specifications here, 25%, 10%. They do fluctuate, and also with EU shares and the US shares as well. So with that being said, that's just the final example that we've got on the pound. So the P&L calculation, same as above. So it would be the open minus or plus the close to give you your give you the difference. Multiply it by 20, or 35 in this case, which is the volume size. And then we are looking at the pound dollar rate, because that's what's going to be coming out for the trading. Now, I'll just bring you on to European shares now. So European shares, the notional value is in euros, and it works differently to UK shares. So Adidas, for example, we've got 233.45, and that equates to 233 euros and 45 cents notional value. So let me just switch to my other trading account. Give me a moment, and this will set up the trade that I have open. Again, the European session is closed at the moment, so I just left this trade open just to give you this this example. So Lufthansa, for example, which I've given you here, we've given, it's the same basically as the UK shares, except that it's quoted as it is in euros. So for Adidas, 233.45 times one volume. This is one share that I've taken out, times 10%, which is the margin requirement percentage. But this time, to get the margin, we're going to times it by, multiply it by 1.13 approximately, which is the euro dollar exchange rate. So let's just take a look at the P&L calculation as well. So the open price plus or minus the closed times the volume, and then multiplied by the euro dollar rate as well. The final step is to convert this figure into dollars, which is the base account currency. So let's just take a look at the example here. 387 times 10 times 113 is the rate at the moment. So let's just do that on an MT4 account. So as you can see here, we've got 7.54 minus 7.32. Again, I did a buy, so I'm in a minus already. And then we are multiplying that by 10, 2.2, and then we're multiplying it by 1.13, approximately 2.48, 2.49. Again, the euro dollar rate will just be a rough guide, 1.1317. We are just looking to see roughly how we're getting this figure here. Same for the margin as well. So margin percentage, 7.54. And then we're multiplying that by the lot size. And then we are seeing what the margin requirement is. So let's just see for Lufthansa. Specification is 30%. So now times 0.3, and then we are 22.62. And then the difference is because this is quoted in dollars. Why? Because my base currency is in dollars. So what do we have to do? Times 1.13. Which I've just 2.62, bear with me 1 second. I'll go back to the example here because I've just clicked off, clicked on 0 by accident. But so the margin 7.86, like I said, times the lot amount could go as low as 0.110 and then times 30. That's another good point I wanted to make. You can actually see the minimal volume for some of the shares. It goes down to micro lots. Some have actually one lot as well. So for this, for example, oh, that's that 0.110, but you can see on here, minimum maximum trade size for EU shares, most of them are 0.1. If you go on UK shares, most of them are 10. And for dollar shares, most of them are 0.1. So it just depends on what you're trading on, what market you're trading on as well. So with that being said, let's go into the final American shares. And I'll just change my MT4 account to my American trades. Just bear with me one moment while I connect. Okay, brilliant. So I've opened and closed some trades in the past on some American shares, but I'm just trying to find what account it is on. I'll just go into Web Trader by accident. Moving a bit too fast. Let's go back to my previous account number just for the demo. So possibly the American shares, if you've got an American based currency, is probably the easiest to manage. I don't have a live example apart from Apple at the moment. So like I said before, we're just basically getting the open and close price, seeing the difference and multiplying it by 1. So as you can see here, all this is at the moment is 171.46 minus 166.92. And that's pretty much, I did 166.95 by accident, but that's pretty much the P&L 454. With the margin requirement as well, let's go back to our equation here. Margin requirement is the notional value times whatever volume you're opening, and then times in by the margin requirement. So for Apple, for example, our margin requirement, always good to look on the MT4 platform for all these things if you don't have access to the website straight away. Margin requirement 15%. As I did at the beginning of the presentation, that makes up a little bit of the bulk of that. Another thing I want to just point out as well is the trading hours. So this is in GMT +2 until we go into summertime, which then it will change. Daylight savings time will change to GMT +3. So these are all the open and closing prices times plus some break times if needed. As you can see here, from 2 o'clock in the afternoon to 3 minutes past 2, there is a break. So it's important to note when this is. 6:30 is the cutoff time or the closing time. European shares, when the European session opens, again from 10 o'clock GMT +2, small break, and 6:30 it closes. And for the American session, as you can see here, 4:31 until 11 o'clock for all of the shares there. And again, this can be found on our website at orbex.com. Now, proceeding with the after the calculations. So how is stock trading different to Forex trading? Well, let's take into account why a lot of clients and traders look to trade stocks in general. So company versus country. So the company is the stock basically. However, the stock is, however the company is progressing, this is how the share price is reflected. However, when you're trading gold, for example, or euro dollar, it's to do with the country itself. So euro dollar takes into account, obviously, the European euro and the American dollar. Gold takes into account the American dollar quite significantly because it seems to go back to back with it, pound dollar, and etc. for all these currencies. So it's something you might want to look at or be more interested into. Again, 24 hours versus 8 hours. Usually the stocks are open for 8 hours only, whereas the Forex market and commodity market are open 24 hours with a small break just over the rollover time. We've got pips versus cents and pence. Obviously, to work out a pip, we saw that on the previous webinar where we saw how we can work out 1 pip. So for example, any quote currency that ends in USD for Forex is $10 a pip, such as these ones I'm pointing out now. And for Swiss franc, it's a certain calculation along with Canadian dollar, British pound, etc. So it's roughly in or around the $8 mark to the $13 mark as the pip prices fluctuate. However, for shares, we are not looking at that. It's basically cents and pence, depending on what the company is doing. American stocks are quoted in dollars and cents, as I said before, European in euros and cents, and British pound in pounds and cents. Ex-dividend dates as well, something to keep an eye out for, because when these dates happen, we see the stock actually drop a little bit during the ex-dividend date announcements, and bears are usually in the market for these periods. So basically, if we can just get this is Netflix, for example. If we just do an hourly chart, this could be a nice ex-dividend date because that's when the stock drops, and we see a lot of traders in the market because it is an expectancy that the ex-dividend date will make the stock drop significantly. So just a few things to look out for when you're trading stocks as well. Now, different types of trading. So we've got, I've just picked out a few different types of trading just to get a little bit more knowledgeable. So we've got position trading. So a long-term strategy where a trader decisively sits in a position for several weeks or even months, waiting for a big price move. So as you can see here, this is over the course of a few months. We've got an entry price here when the price just starts picking up. So we see little ripple effects of the price, and then we see a gap in the market here. And then this is when we know the price will start moving. Again, another price gap. We see retracements, slight retracements, but overall, as you can see, the trend is the friend of the bull here. So we're looking at the retracement moving up and up and up. However, we exit, or the position trader will exit when he sees a significant gap in the market to the downside, and then realizing that this trend is over. So this is what position trading is, just basically holding it, purposely holding a trade for many, many months, even probably quarterly sections of the year, until the price starts really dropping and moving away from the trend. So this is a very good example here. Swing trading, however, is capturing shorter term moves, usually lasting days to weeks. So it's a little bit less than the size of position trading. And as you can see here, swing trading is basically, it is what it is. So we're swinging, I've got this on a downward trend. So all in all, the trend is going down. However, it's a lot more gappy and a lot more volatile. So these big trends in the market are moving, and then we're moving quite higher. And then there's another swing low, another swing high, and another swing low. Depending on what the trader wants to get on, whether it's the sell or the buy, they're looking for the big swings in the market. So as you can see here, the difference between position trading and swing trading is basically, the concept is the overall long-term trend of the position trading will last without really too many ripples in the market. Slight retracements, but nothing to worry about. But with swing trading, there are very big retracements, and this could lead to a little bit more losses. However, if the trader is keeping an eye on the swings, then it shouldn't really be too much of a problem. So let's just take a look at the other different types of trading styles. So we've got position, swing, day, and scalping. These are the 4 most common trades as we look at what we can see in the trading cycle. So holding period, the position trading is obviously vastly higher than anything else, weeks and months. Swing is days and weeks. Day is daily, but not holding any positions overnight. And the scalping, seconds and minutes, and again, no holding any positions overnight neither. Okay, and just to look on another interesting method is the can slim. So the can slim is basically an acronym developed by American educational company, and it basically represents 7 characteristics that stocks often share before making price gains. So we've got C, current quarterly earnings, annual growth earnings, new product or service, supply and demand, leader or laggard, institutional sponsorship, and market direction. So with that being said, these 7 characteristics are something that a lot of traders take into account when they're looking to start buying stocks and making these price gains. So current quarterly earnings, as you probably are aware, current earnings should be at least a certain amount of percentage in the most recent financial quarter compared to other quarters in previous years, or even in the same year. So it's a very positive sign if we can get current quarterly earnings more than the previous quarter. Annual earnings growth as well work in the same respect. It should be a certain amount up and must last over at least 3 years. New product or service, this refers to the idea that the company should have continuing development and innovation. So if you take a stock like Apple, for example, that are continuously developing their iPhones, then this particular stock should keep on pushing higher and higher, and new products or services should be something that they are looking at as they go into the next year and the next year after. Supply and demand, it goes hand in hand, really. So a gauge of the stock's demand can be seen at this time when there is a supply and demand, a supply for the product, and obviously a demand in return. L is leader or laggard. We're seeing if the stock is something that is going to lead or lag in terms of like relative strength, which is designed to measure the price of a stock over the last year. Institutional sponsorship as well, very, very important. It refers to the ownership of the stock by mutual funds or larger institutions as well. And market direction, finally, which categorize into 3 things. So market is confirmed in the uptrend, under pressure, and market correction. So with that being said, we're seeing what happens in the next, as a stock gets more mature, this cancelling method can come into effect as well. So just a few categories of stocks as well. Before I go on, just being asked, how does the NFP affect the market? Well, we've seen that the non-farm payrolls have been very, very significant in the last few years. And as we go into the next round of NFP data in the next couple of weeks, we are looking at, if there is a downturn in the economy, then we're looking that job numbers won't be so great. But after the Omicron virus has pretty much spread throughout America and Americans are dealing with it, then a lot more jobs are getting back onto in the ballpark figure of what we need. So I'll just quickly answer these questions. Bear with me one moment. Thank you for bearing with me. So basically, I just want to point out that the NFP job numbers they're very, very advantageous, because if the American jobs economy doesn't get the amount of new jobs added on a monthly basis, or doesn't exceed expectations or match the expectations, then America being one of the biggest economies in the world, it greatly affects markets. So we'll get back to that shortly though. So some categories of stocks as well. So cyclical, these generally follow the economic cycle of expansion and recession. So hotel, airline stocks, car manufacturers, etc. Growth stocks, companies that are anticipated to grow at significantly above average. and value stocks shares trading at a low price, even though the company's at a strong financial position. So I picked out Netflix and Peloton at the moment because what I want to show you is the rate of Netflix during the course of the pandemic. So naturally, a lot more people were working from home. A lot more people did not go to work. So these streaming companies such as Netflix, Disney, and the rest of the competitions that they have out there, because there's so many of them now, we could see the peak of Netflix moving to record highs up to $700. As I said, for American stocks, this number equates to dollars. So $700 a share. And now we see the fall in Netflix because the economy is reopening. They missed their subscriber growth number not so long ago. And in doing so, prices did fall quite significantly. So it's very, very important to understand that when there are things like the pandemic was a very, very good example, because we had things like Netflix and Peloton who took advantage of the lockdowns. Peloton is an exercise company, does exercise equipment. This company was in very high demand during the second wave of the pandemic, because, as I said, a lot more gyms were closed. A lot more people had less time to go out. They couldn't go out because of the lockdowns. But now, as you can see with Peloton, we're seeing this amazing decline because people are not ordering their products as much anymore. And this is to do with the fact that gyms are reopening. We're seeing a lot more people out. Restrictions have been lifted quite fully in a lot of countries. So just bear in mind, when you are looking at shares, it's not all about the company itself. Look at the fundamental aspects of it as well. Naturally, when there was a lockdown, what stocks would get a lot more attention? Well, streaming services, because people are at home a lot more. Home exercise equipment, because people are at home a lot more. With this being said, Peloton and Netflix and a host of other shares reached record peaks. But now that the pandemic is coming to an end, we're seeing this decline in a lot of the markets. And as you can see, it is across the board for these quite favorable, well, once favorable shares. But it's not to say they won't bounce back. There is a possibility that they will. However, we are looking at the bigger picture at the moment. And I just want to show you, with that being said, earnings season is a very, very important part of a stock's future as well. If we look at Facebook, not so long ago, they had their earnings season. And guess what? They missed subscriber growth for one of the first times ever. And look at what happened with their price. So it went from 321 and then dropped to 247. So that's nearly $100 drop in one session, just because they missed subscriber growth. So, and $20 million was wiped off their account. So earnings season comes around every quarter. It's important to see. You can go on any website to see the earnings season calendar. And if there is a suspicion that a company such as Facebook, or let's say Tesla, does not exceed expectations or match expectations on their growth in general, then we could see a very, very big swing low. And that's what we've done with Facebook at the moment. Going back to the examples we have, value stocks, shares traded at a low price, even though the company is in a strong financial position. So Twitter and ExxonMobil are very good examples, because ExxonMobil is one of the biggest oil companies in the world. However, their stock is still at $77 a share. It hasn't skyrocketed to $700 a share. It's still at a reasonable amount for such a company that's doing quite well in the market. If we just zoom out, as you can see here, again, with these growth stocks and cyclical stocks, this is another very good example, because when the pandemic first hit, guess what? We had record lows on the stock, and that was at the 20th of March, 2020. We had the first wave of the pandemic, and then we had the second wave of the pandemic towards the end of 2020. But as you can see, travel and tourism started opening again, leisure facilities started opening, a lot more people started getting back into work and going out. And look at the signs here. We've seen complete advancement in the stock. So again, this is something to look at if there is in future another pandemic, if there is in the future more lockdowns, then these type of shares and stocks will start trading a lot lower. We saw oil futures dip to record lows, negative territory during the course of the pandemic. And guess what now? Because there's a lot more demand for oil, we've seen the push for oil as well in the last few months. So with that being said, it is very, very important to try and make sure you know what you're looking at when you're trading stocks as well. So let's just take a look on EasyJet as well. EasyJet, obviously a low-cost flying UK flying carrier. We're seeing after the second wave or third wave of the pandemic at the summer of 2021, at the start, we're seeing such an ascension in the stock. But you know, there is always a come down afterwards. But at the height of the lockdowns being taken out, you can see that these stocks are moving higher and higher. So again, it's just a noteworthy cause that we are looking to see what's going on. Just wanted to take a look on gold as well, because I wanted to bring this back to a weekly chart where, sorry about all the red lines, just putting a few things in here. So I just want to take a look at gold, because again, it's not just shares that are you can trade based on the state of the economy as well. When we saw the first wave of the pandemic, we saw gold rise to an ascension because the dollar was weak. And why was the dollar weak? Because of the Omicron virus and the viruses before that when COVID first came. So traders flocked to gold as a safe haven. And in doing so, you can see that when the shares were down, when the company shares were down across the board, gold was something to bank upon as well. So just another thing to keep in mind, as you can see here, moving, you know, towards the 2100 handle for the first time in a first time ever, as if you look on the history of gold. So with that being said, it's not just shares you can look at, you can actually trade and hedge upon gold and other commodities based on what you're dealing with as well. So just keep an eye out for Netflix, Peloton, these companies that are going to keep probably falling because of the desire to invest in Peloton and in other companies as well. It was natural that these shares would start dipping due to lockdowns and other things coming out as well, being lifted, sorry. So back to the presentation, almost done with this presentation. Just want to go through a few more things before we close. So how to trade stocks. So basically, fundamental analysis is one of the key drivers. You know, as I said, the pandemic drove a lot of the shares to the upside and to the downside in both directions. And with that happening, we saw a lot of companies in the news. Obviously, a lot of companies fell to record lows. They missed their quarterly earnings and earnings per share more significantly. And that obviously delved deeper for the stock. What stocks are in the news? That's just touching upon the first bullet point. You know, you can look at stocks all the time on any website or even our blog at orbex.com. We do trending topics on a weekly basis, and we had some acquisitions recently from Amazon, which saw a few companies being potentially bought, and we're seeing now that a company called Activision Blizzard got purchased recently by Microsoft. And because of that, we saw the Activision Blizzard stock jump by almost 30%. And I'll just show you that at the moment. So I'll just pull that on there. So this was on the announcement that Activision Blizzard will be purchased by Microsoft, which was one of the biggest tech, was the biggest tech purchase in history. It's just under $70 billion. And because of that, stocks jumped up by 30%. However, because it was a one-time news event, there was a natural decline in the price. But now we see prices picking up and consolidating. So again, just look out for the headlines based on this, because Activision Blizzard is just one of them. Peloton as well is a company that might be purchased by another company. So it's looking to start moving up, Peloton, at this particular moment here. So Peloton did get in the news that it was being purchased. However, it was a bit of a flash in the pan. It didn't really last long, and now prices moved to the downside. So these are quite good opportunistic price movements, if you see in the news headlines that a company is being purchased, then naturally the stock will start jumping higher. If you miss the jump to the upside, then there is always the chance of a retracement, which is what we saw here for the last few trading sessions. And the same with Activision Blizzard. Again, we saw the big jump, but then we saw quite a move to the downside. So, you know, based on that, that's an $8 move, depending on what your lot size is, could make a nice little profit there as well. So that's basically checking out what's in the news on a daily basis, because there's always something going on. What has the highest value? That could be beneficial for you or not. Tesla had a high value, but had a stock split to keep the price down. So a stock split is beneficial for the average trader who wants to just dabble into buying some buying some shares in a big company. So it makes it a little bit more affordable. So before the stock split, Tesla was valued at over $1,000 a share, but now it's a lot less because of the stock split. What names to look out for as well in the news? You know, you've also always got Elon Musk, the CEO of Tesla, Mark Zuckerberg, CEO of Facebook. These people are always in the news and obviously writing their own destinies for the companies as well. Elon Musk currently sold $6 billion worth of Tesla shares to give to charity. It didn't really affect the stock price that much, but is he going to do it again? Obviously, Tesla are worth over $300 billion, so it probably won't matter too much. But with that being said, will we get another sale of shares that could really affect this company as well? And just lastly, so why do we build a share portfolio? What is the reason? Well, we've got risk diversification. So we invest more broadly into more industries. So instead of going for your basic Forex pairs all the time, we're looking at the amount of shares that we can really look at. You know, we've got Chevron, one of the biggest oil companies in the world. You know, we've got McDonald's, one of the biggest fast food chains in the world. Their price obviously went up during the pandemic because no one could dine in. So many people are getting takeaway foods as well. Pfizer, for example, one of the biggest pharmaceutical companies in the world, their shares actually probably quadrupled quite significantly during the course of the pandemic. If you saw here, I believe it was around this time, just before 2020, that we had the first licensed COVID-19 vaccination from Pfizer. And as you can see here, there's a meteoric rise on each one of these upside swings, and then another upside swing as well. Now we've got a bit of a downward turn for Pfizer because obviously the interest has waned, and also there's a lot of competition in Johnson & Johnson, AstraZeneca, and a few others that are out there now that are trying to see if they can get more vaccinations as well. Like we said, Peloton, they went vastly down because of their supply and demand. So with that being said, you know, I've just given 4 examples there of why these shares were kind of magnified during the pandemic, but started falling lower. So this is why build this portfolio: risk diversification, invest more broadly into that. And we can see why to build a portfolio as well. And trading assets that are more relative, interesting, and inspiring. So if you've got a hobby, say you might have a sport hobby, or a book hobby, or a pharmaceutical hobby, maybe you're going to be more interested in these kind of stocks and shares rather than just trading on airline shares or, you know, Facebook shares or something. If you have an airline hobby, or if you're just more interested in this industry, then you might want to go more closely to this kind of industry rather than simply just trading on Forex pairs. So it could be more interesting and relative to you, and trading at a more convenient time period. So wherever you are in the world, you know, there's always going to be a stock market open, the UK, European, Asian, or American. These are all good good times of the day where you can really capitalize on share trading as well. So just keep that in mind when you are looking to trade shares, and what it can be as well. It can be very, very informative and very, very, very beneficial as well. So that's a reason to build a portfolio and diverse some shares in there. And as I said, with the minimum volume requirement of 0.10, it literally costs for the margin hardly nothing to open some shares and just dabble into the stock market to see what you can really get your, sink your teeth into in that respect. So that being said, thank you for your attention on this webinar. Please join me next time, this time next Monday, where I take you through money management and trading psychology. Now, what I want to just pick up on at the moment for money management and trading psychology is the fact that we are looking at the moment on why a lot of people are worried about entering trades, exiting trades at certain times. Are they also looking to see if there is a danger? There's a fear. The psychology is fear, greed, optimism. It's basically a lot of things rolled into one with trading psychology, and obviously that affects your money management as well. So I want to delve more deeper into money management and trading psychology, getting to know what traders can think about or feel about when they're handling, risk capital, because a lot of people don't realize that when you are risking your own funds on a live trading station, it can be a little bit more daunting than just opening and closing on a demo account as well. Yes, that'll be my next webinar. And as I say, it's this time next week, and I will be able to see what I've always been interested in trading psychology. So I've had my emotions being stretched quite a few times when setting up trades. So it's very, very interesting how it can affect your trading as well. So that's the end of today's webinar. I'll stay online for another 10-15 minutes to answer any questions. Some people are asking if the presentation can be shared. If you send me your email address, I'll be able to send you the slides for the webinar, so you can take any notes you like. And also you can get back to me on our blog at orbex.com. As I said, my name is David Kindley, and we'll be able to, I'll just put that back up for you here. So you'll be able to see what I look like, and obviously the free webinar that we're going to as well. So I'll send a couple of people that have been asking for the slides. I'll send them now. And as I said, I'll stay online for roughly about 10-15 minutes to answer any questions you might have about the webinar. And once again, thank you very much for joining me, and I'll be available for questioning, and also I will be on my live webinar this time next Monday. So thank you once again, and bye for now.